morning from the For the See Me. This is Chris Robinson with your Traders exclusive comment here today. What are we looking at in the grains? Well, tomorrow, actually the Chinese are already here in Chicago. They're going to be speaking tomorrow. The rumor is that they are going to allow GMO corn. That's big. And they've already allowed 5 to 6 loads of DDG, which is what's left over when you process corn in an ethanol plant, dried distiller goods, DDGs. In any event, that's supportive potentially for corn, especially we have a 2 billion bushel carryout for corn. So what's going on in the markets? Well, corn's been pulled up, really started going higher about 3 weeks ago. The biggest surprise actually is what's happened with wheat. Now, wheat's had some volatile moves, but it's now moved up to its a 6-month high here today. There was a lot of resistance at around 611, 612. That March wheat is now trading close to 640, so it's moved above old resistance, which went all the way back to July. That's being spurred by the collapse of the ruble, even though the Russians today raised their interest rates to try and help their currency. The concern is that the Russians will hold on to their grain and not export, so it's giving speculators a chance to move the price of wheat higher. Fundamentally, there's no problem with wheat. There's plenty of wheat in the world. With the US dollar at a 5-year high, our wheat is most expensive out there. However, markets do irrational things, and I had a client today said, well, how high can it go? Nobody really knows. It's giving you opportunity to either get long or fade, depending on, or get short, depending on what your personal opinion is. But the good thing is we've got a volatile market, which is giving you opportunities to do something. And typically, we've only got a couple weeks left here in this year. December is usually a very, very thin trade, very, very dicey. We've got some action in the stock market, although it's not as dramatic as a lot of people would make you think. We were just at 18,000 a while ago. To come down to 17,200 or 17,100 as a percentage move, it's not that big of a deal, but it certainly gets people's attention because I like to talk about the flat number. That's spilled over into the second thing I wanted to talk about. So we've talked about wheat and corn. Look at the livestock. You've got feeder cattle have finally had their correction everybody's been looking for. We're down about $20 here in the last 6 or 7 days off of contract highs. It's typically the way markets do. They go up the staircase. We rallied for the past 14, 15, 16 months. A lot of people lost a lot of money being short. And now here in the past 6 or 7 days, we're boom, 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 lower. So now there's a chance that we could get oversold. The market today synthetically was telling you, even though we were locked limit down, that there was another $4 to $5 synthetically. So that suggests that when the market reopens, we could be locked limit down again. It's 3 cents a hundredweight. So what happens is it trades 3 cents and it stops, limit down. That's in response, I think, to the slowdown in the Chinese economy. Their PMI came out today, and it's the first time in 7 months I think they've had a contraction. So this is all kind of flowing through. You throw it all in, it's kind of an interesting December. But I think if you're looking for opportunity, you've got to look at the wheat, corn, and then finally you can take a look at the meats. You've got to be very careful. You've got to be very disciplined in the meats because they can be very, very volatile. But it might be something that you want to look at if you're looking for a speculative trade. From the For the See Me, this is Chris Robinson. Have a great day.